Hello, everybody. Welcome back to another episode of the Capital Gains Tax Solutions podcast. As always, not having a clear plan is the enemy. Having proven tax deferral strategies such as the DST, the Deferred Sales Trust, is the best way to exit highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. I'm your co-host, Pearson York, filling in for Brett Swarts. As always, we bring on amazing guests. Today, we have a fantastic real estate agent out in the Bay Area of California, Stephen Minchen. Been a broker for about 30 years. We're going to talk about the market. We're going to talk about, how things are going and how to defer taxes on the sale of primary residence. So, Steve, how you doing, my friend?
Good. How are you doing?
I'm doing awesome, man. Awesome.
So,
30 years in brokerage. You've seen some stuff. You've seen some market cycles. We're going to get right into it today. Tell me, what are you seeing out there today?
So what I'm seeing out in San Francisco and the Bay Area is a great majority of people a year and a half ago refinanced their home below 3%. So there's a very low motivation to sell properties, and they have amassed huge equities in their homes. So what I see is the concept of we have a low interest rate and we have a huge amount of equity, and that's always the trick of getting people to sell their home. What that has done is removed inventory from the market, making a very tight inventory market, which has maintained prices on most properties. There are some exceptions to that rule.
Yeah, absolutely. And I'm just for context, everybody, I'm out in Newport Beach, California. So Steve and I are both in California. I would say in very high affluent areas with highly appreciated, expensive primary homes. And I can echo that for sure. People refied, they don't want to sell. Where are they going to go? And if they do sell, right, and they are downsizing or whatever, they're basically paying the same price.
Yep.
With the interest rates, and they're losing out on a bunch. So it doesn't make a whole lot of sense. So inventory is absolutely low. However, there is this kind of ongoing trend that, unfortunately for us Californians, we have to discuss, and that is the mass exodus that's happening from these affluent areas due to whatever the factors are, high taxes, political reasons, whatever. But people are leaving California and they're going to Florida and Texas and so on and so forth. So, Steve, how are you seeing that affect the Bay Area real estate market?
Well, I have 5 clients right now that are all leaving San Francisco for various reasons. A lot of the reasons are similar. The tax structure is better in other states. The other states are welcoming of businesses. And a lot of people are somewhat tired of the political structure where some of the problems that exist with homelessness, crime, they feel hopeless and trying to get resolution. So they've decided to relocate. I see a lot of people going to North Carolina, Florida, and one this week going to Chicago, believe it or not, which is not necessarily a better crime area, but I think a better tax area. So I do see this, and it's affecting real estate, which means there's fewer buyers wanting to come into the area to take over these properties that are on the market. So we see a little less migration into San Francisco, but a lot of migration out. So that's where you see some, valuation issues.
Sure. How is that affecting your guys' prices?
So prices have actually statistically come down. They say 12% if you look at the numbers. As someone in the field, I do not see prices dropping on properties that are well positioned, that are what a consumer wants. They're not necessarily dropping, but the buyer pool has gone from maybe 10 people interested to maybe 1 person or maybe 2. So the interest levels usually decrease because of people not wanting to relocate into the city.
Yeah, absolutely. How are you guys overcoming this challenge right now? What's the strategy?
So the strategy in overcoming is always about the price. No matter how you slice the apple, at some point, a price will overcome a negative. So I tell all my clients that if you want to sell your home and you're absolutely serious about selling your home, price will overcome a lot of objections. So we work on pricing, we work on position of home, how it's presented to the market through various strategies. And if it's priced right and the market position is looking good, it will probably sell. If you're priced at market or above, probably not. It'll take a long time now.
Yeah, definitely. We're seeing that here as well in Newport Beach. Those coastal cities, right? The real estate down here, and up there too is what's interesting is that in those highly desirable areas, like
Yes.
those properties are still selling. I mean, an $8 million beach house just sold the other day. Like there's still buyers out there who want to be in this area for a variety of different reasons, right? Not every single person is leaving,
Nope.
uh, you know, although a lot of people are. So we have two things kind of going on that that we want to touch on. We have a seller who may not really have a very high incentive to sell because of locked in good debt. They've got a lot of equity. They may have capital gains tax. Where are they going to go? They have their family here, right?
Yep.
They're not necessarily looking to move. However, there might be a person that's like very interested in getting out, and the taxes and everything. They don't care about their interest rate, but they do care about their capital gains tax. And so I wanted to just kind of touch on that really quick. What's the biggest frustration that you're finding with sellers who are looking to relocate that have a ton of equity in their property?
So when I go on listing presentations, the main question I get asked, I don't want to pay capital gains. We've owned this home for 20 years. We paid $149,000. It's worth about $4 million. We don't, that has been the biggest restraint in the Bay Area for many sellers. I've gone into homes where people are actually on walkers. They can't even get up and down the stairs of their home, but they're so concerned about paying capital gains that they refuse to sell their home. So this is a huge issue. This was an issue even before the tight inventory market. So this has been, after meeting you guys, I am so excited about the programs you offer because it really gives a seller of a single family home an out in how to structure taxes so they're not clobbered.
Yeah, definitely. So to that point, right? There's a couple different strategies out there that we can use, right? One of them, obviously, everybody's aware of. It's called the 1031 exchange. But the biggest frustration with the 1031 exchange, for you, Steve, is what?
It's mainly an investment property. So a single family home does not qualify with the 1031 exchange transfer. So it means that you have to have a 2-unit building, you have to have rentals. So it's not applicable to people in single family homes or condo homes.
Right. And that is with the primary residence, right? That is the biggest challenge. A lot of people will get what's called a 121 exclusion, but that's only $500,000 if you're married, or
Yes.
$250,000 if you're single. And I'm assuming, as with Newport Beach, that $500,000 doesn't mean anything.
It means nothing. The price points, most of my clients have multi-million-dollar profits in their homes if they've owned them for 20, even 10, 15 years.
Yeah, absolutely. So, and that kind of, dovetails beautifully into kind of like our next segment, right? The biggest frustration is they feel trapped, 90 years old and they have a walker, right? So what's the strategy? And we're going to kind of just outline that a little bit right now. So the strategy that we like to use is called a deferred sales trust. And what's unique about a deferred sales trust is that any asset that's highly appreciated pretty much qualifies. So it can be a business, it can be a real estate asset, but it can be a primary home, or it can be an investment property. It could be commercial. It could be a stock. There's a lot of tech stocks out there, tech companies that,
Yep.
These kids come in and they develop something and then they IPO and then they're hit and they get, shafted. And so it works with all of these different asset types, including businesses and everything. The primary home is one of the big ones, especially for the affluent areas like we're in, Steve.
Yep, it's true.
Because there's that 500,000, but other than that, there's nothing else for them. And so this strategy allows the person to liquidate the asset, defer all the tax, and then go ahead and reinvest the proceeds into pretty much whatever they want, as long as it's for investment purposes. Now let's talk about just a couple of the things that you cannot do with a deferred sales trust, and that is for personal use items. For example, someone wants to turn around and they want to buy another primary home. Okay, well that's going to pose some challenges because it's for personal use. Some of the different potential strategies that we use with that depending upon their basis, right, we're able to do things like potentially do a refi and pull capital out up to their basis, which they can turn around and then use as a down payment. And then when they sell the house 6 months later, they liquidate the debt, and then they go out and they use the cash flow that they're receiving from the trust as a way to qualify for the loan with the down payment that they received, all tax-free. And so there are ways around it. What are your thoughts on that?
I think it's a great option. I was super excited to have a lot of familiarity with this program. I think it gives a client a various options that I was honestly not aware of until recently. I think it's underutilized, under discussed, and I think it's a great way to reinvest into assets and defer taxes as you make these decisions. I think it gives people options to sell their home and not have the stress of capital gains. It gives them several options.
Yeah, absolutely. And that's pretty much what we're looking for, right? We're looking to when you peel back all the layers of the onion and you get out and you get past the strategy, right? And you get really down deep into the what we're really providing. And when you boil it all down, we're providing freedom. Freedom from capital gains tax, freedom to sell, freedom to relocate, freedom to start a new business, freedom to, not have to pay the tax. There's all these different types of freedoms that come with this strategy that allow people to not only kind of get out of their current situation, but exponentially increase their ability to provide for the future generations as well.
Absolutely. It's absolutely an astonishing mechanism to answer the question I get almost on every listing appointment. We don't want to pay capital gains. What can we do not to pay capital gains? So I absolutely find this to be a great solution. What I always do in this situation when asked is I am not the expert. I refer it on to people like you who can help answer the questions, and you can help guide them through the process. I am just a facilitator to make the introduction. I am not going to be the knowledgeable person on the techniques as you are in your group. Excellent information you guys offer.
Yeah, and I think that's really important too, right? Because a lot of people will try to come in and be like, try and teach it, and they don't fully understand it, and they butcher it, unfortunately, yep. Right? So that's the best way, Steve, to solve the problem, right? Is just to make the introduction to the people that actually do. I mean, as real estate agents, right, we do it all the time with roofers, with loan officers, title people,
absolutely.
Right? All we're doing is connecting people. Hey, here it is.
What I find important is to be able to be the facilitator of the best people who can help my clients. I deal with a lot of high net worth individuals, so they expect me to have a good team of people that I can refer to them, such as yourself. And I strongly believe in that. I stay in my lane. I know how to sell a home. I know how to position a home to be sold. But when it comes to taking your money, I am not going to be the person you want to be advised to how to structure your tax liabilities. You guys are awesome at doing that, and it's a great service. It really is. And I'm happy to always give you guys the referrals to answer questions and to market your structures to the people directly.
Yeah, absolutely. So that's really wise on Steve's part, in order to facilitate that. Just get them on the phone with us, and we'll tell them really quickly, hey, this is for you, or hey, this isn't for you. Right. And here's why. Going through that, I just want to touch on the minimums really quick. If you're thinking about things, our typical minimum deal size is $1 million net proceeds and $1 million gain. So at least if you have $1 million in gain, we know that it's going to be painful enough for you to kind of go through the process. There's a lot of people who ask, okay, hey, what's the downside? It sounds really good. And I would say that the downside is it's so flexible that it's customized to each individual person. And so it takes a little while to really build the plan around what you need and your goals and everything. And it requires some time with you and your professional team, your CPAs, right? Your real estate agents, your tax attorneys, your estate planning attorneys. Like, all of these people need to get involved because we want to know what's all going on so that we can position you in the best light. One of the unique things about the Deferred Sales Trust is that it's a cornerstone strategy. It's used in conjunction with other strategies. And when you multiply them, they compound. And when they compound, you're generationally increasing your wealth, exponentially increasing your ability to invest, net of attorney fees and net of taxes. And so it's a phenomenal strategy, a phenomenal solution to a really interesting problem that a lot of people haven't solved for a long time. So
Well, I think it's a huge problem. As I said, it comes up on every meeting. So I think with the solution to that problem opens the real estate market for listings. I firmly believe that if that one issue can be resolved, about 80% of the people that I speak with would be comfortable enough selling their home. I mean, I don't think someone 90 years old wants to live in a home that they can't even walk down the stairs to leave the house. I don't think that's their intention, but their fear of taxation is greater than the fear of discomfort of living somewhere it's not appropriate for them.
yeah, absolutely. So Steve, one last question, and then I know our time is coming and running up, but how are you planning on leveraging this strategy to increase your business?
On every single listing appointment, I am going to make a recommendation before they make a decision. They speak with you. I believe that what you offer is so powerful in having solutions to the problem that I most hear about, which is capital gains, that I think it's worth a discussion with every person that fits the criteria. And in my area, $1 million is not considered a lot of profit, honestly. So the people that I speak with should have a dialogue with you to see if it fits for their strategy, to see if there's a further interest in trying to save the capital gains, which is so important to most of my clients.
Yeah, absolutely. Awesome. So, okay, Steve, we're coming up on our time here, but do you have any parting words for the audience? Do you have any pieces of wisdom?
I would tell everyone that the housing market is strong. If you're thinking about making some decisions, don't let capital gains get in the way of making that decision. If you're thinking about making a decision if the market's going to get better, it is what it is. We know today what it is. It's still good. Newport Beach, San Francisco are solid markets. There's still people with resources that are buying, maybe not as many, but they're still out there. And I'd recommend you make decisions based on today, not the future.
Absolutely. Steve, where can people find you?
I am at the Minchen team. So it's Steven@theMinchenteam.com, or my cell phone is 415-690-0352. I'm good at text, email, or, whichever works.
Phone calls.
Phone calls. I love those too.
Phone calls.
Everything. I'm very responsive on my new Apple 14.
Awesome. Okay. And that's Steven with a V, Steven at Minchen, Minchen, team, team.com.
Awesome.
Look for Steve Minchen. If you are in the Bay Area, if you have a capital gains tax problem, reach out to Steve so he can reach out to us.
I can reach out to you guys. You're the experts.
If you're looking to liquidate an asset, any highly appreciated asset, and you want to learn more about capital gains tax solutions, you can go to capitalgainstaxsolutions.com. We have a mastermind every Friday at 10 a.m. Pacific, 1 p.m. Eastern. In fact, we're about to start right now. So if you're watching this and you want to hop on, capitalgainstaxsolutions.com, register for the mastermind, catch us live on YouTube, on Expert, CREsecrets.com, Capital Gains Tax Solutions YouTube channel, Kingdom Luxury Realty YouTube channel, living in Newport Beach. So please hit the like button, subscribe button, notification bell. Thank you, everybody, for watching another episode of the Capital Gains Tax Solutions podcast. As always, we believe not having a clear plan is the enemy. So using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way to exit highly appreciated assets tax deferred, so you can create, preserve, and grow your wealth. Thanks, everybody.
Thank
Have
you.
an awesome day, and we'll see you next time.